Swayam Prabha. Digital India. Educated India.
Welcome to this class. We were discussing how to do case analysis in the last class. Just to refurbish your memory fast, what is case analysis? We said we are looking at the performance of an organization over a period of time, and then we try to gather information on its history and the operations environment, get data with respect to the functional areas like marketing, finance, operations, human resources. To the extent that we present or a case study presents a realistic data, that is, takes data from a real life situation, to that extent the case will be more closer to real life instead of being hypothetical. So, the student will be able to appreciate or able to understand the problems that an organization might face in real life, and what are the types of decisions he may be involved to take depending on his area of operations. So, what are the objectives of this case method? As I mentioned, the idea is to apply your theoretical knowledge to practice. Whatever knowledge you have obtained by theory, how useful is this theoretical knowledge to practice? Most importantly, this case analysis gives you how to diagnose a problem given a particular situation. What is the type of analysis that you can do for that type of a problem, and then what are the types of alternatives or the solutions that you can think of given this type of a problem scenario, and then formulate an action plan. It will help you to independently find answers to these practical problems. It will also help you to gain exposure to a variety of organizational and managerial situations. So, depending on the type of organization you are studying, it may be a manufacturing organization, it may be a marketing organization, or it may be an organization in financial services, name it, you get a wide variety of skills to analyze these types of complex situations. So, this is, in other words, what are you really likely to benefit from? It is possible that your thinking process will get sharpened and you will have clear thinking even in complex situations. Because of this, you are likely to be consistent, rational and creative when you draw up actionable plans. It will help you to apply the quantitative knowledge to practice, help you to understand the value of information, help you to communicate better in a group, and also communicate well in writing as well. It will also, in addition to all this, while making the decision process, give a certain personal value to the decision. That is, you can apply some personal values to the decision. Now, how do you develop a case study? This is the next question that you should try to, I would like you to attempt. The case study, you can do it with respect to an organization of your choice. So, it should have necessarily the following aspects, that is the origin, history and growth of company over time, do an organizational analysis. What is organizational analysis? It is do the analysis of the strengths and weaknesses. Do not have to be extraordinarily elaborate, from whatever you can make out, give in a nutshell the organizational environment in which the company operates, then give in a nutshell what is the nature of the external environment. So, it tells you both put together what is the type of strengths, weaknesses, then the opportunities and the threats that the organization faces or has to face. So, in short, you do a what we call the SWOT analysis, then you should present the corporate strategy of the company, present the business strategy, maybe with reference to a particular strategic business unit, then which you are considering, then the organizational control structure and the control systems of that business unit, and what is the type of recommendations that you are giving with respect to a particular situation, that is which you are considering. In order to do this, some of the measures of performance, financial measures of performance, which become extremely helpful. I will just read for you from this book on strategic management. One of the I am reading for you from this my book on strategic management, table 9.1. These are very important tables which you may have a closer look. One is return on investment, that is ROI. How is it calculated? How is the return on investment calculated? So, the return on investment is calculated using this formula. ROI is equal to net income divided by, this is before taxes, divided by total assets. ROI is net income before taxes divided by total assets. Similarly, what does this ROI give you? This is the question which you have to answer. Just look at the type of try to think rationally before looking at what is the type of ROI you expect. Suppose you put your money, let us say, in a fixed deposit in a bank. What is the type of interest that you may get? You may get around 6 to 7% per annum interest, subject to tax deduction at source. Now, let us say you want to make investment of a company's money, that is the resources, in some project or in some activity. then what is the return on investment that you expect? You expect a return which is at least more than this return which you would have got if the money had been put as a fixed deposit in a bank. So, nothing wrong in expecting that type of return. So, that is why even in educational institutions, the other day the top functionary of the Institute of Science himself was telling, I am getting confronted by questions on ROI by economists. They come and ask me, what is your ROI? So, even the field of education sector has not been spared. So, it means to say that the questions are being asked, how much is the investment into the institution? So, what is the return on this investment? So, in other words, even a method of measuring the return on investment even in education sector is also being asked. This is what he was trying to say. So, sometimes many of these things he used to say are intangible, we really can't measure like as you do in a corporate company or an organization. So, in other words, this return on investment is becoming very important in with respect to any corporate venture. So, whatever is the investment that you are making, what is the return that it is getting? So, you expect at least that return to be more than the return you would have got had the money been kept in a fixed deposit in a bank. Now, how do you calculate this return? This is the way of calculating this return, that is the net income, dividing the net income before taxes by the total assets. Then the next indicator or the measure of financial performance is what is called the EPS. The EPS is equal to, or this is the formula for EPS, divide the net earnings, by the amount of common stock that is, find out what is the total earnings that the company has made per year and what is that stock, that is the number of shares. You will get the earnings per share. So, you will get an idea of how much your 10 rupees investment has earned. So, many times this is the one which tells you what is the dividend that is declared. So, for example, a company like Infosys, they say we declare 200% dividend. What do you mean by 200% dividend? 10 rupees is, let us say, the face value of the share. 200% dividend means per one share of 10 rupees, you are getting 20 rupees as the dividend during that year. But it may be another aspect that this 10 rupees share was bought at 2000 or 3000 rupees in the marketplace. Now, Infosys share has been split into rupees 5 only, 10 rupees share has been split into 2 shares of rupees 5. So, this is suppose you want to buy that rupees 5 share, it is upwards of some 2300 rupees. So, you pay for taking one share of rupees 5 of Infosys more than 2300 rupees in the open market, and on that suppose you held that share of 5 rupees for 1 year, that is by the time the company declares the dividend and the share is in your name, the company says I am declaring 200% dividend on this share. That what does that mean? It means that the company is giving you for 5 rupees that you are holding 10 rupees as dividend. But the other fact is that you have paid 2300 and odd rupees to take that particular share. Now, how do you benefit by that? Okay, you got a dividend which is very nominal under 5 rupees, but how will the person trading or holding these stocks, what does he do? He may try to find out the best time to dispose of these shares. Suppose he bought it at 2,300 rupees, he may find that the market, suppose is an upswing and the Infosys share goes up from 2,300 to 2,500, giving you some rough figures. So, then he may say, okay, I bought it at 2,300 all right, now I am getting per share a margin of 200 rupees, that is a profit of 200 rupees. Why not I make this profit? So, suppose he had bought some 100 shares, this 100 into 200, that is the type of money which he would make from the stock market on this. This is a measure of the types of financial performance that you are getting. Then the other measure is what is called the return on equity. What do you mean by return on equity? So, divide your net income, that is how much have you got after your taxes and dividends, by the total equity, number of equity shares held. So, that is the total equity of the company, that will give you the idea of what is the type of thing which you may get, what is the return on equity you may get for the company. There are two more indicators of performance. These are called the economic value added. The economic value added, this economic value added, it is the difference between pre-strategy and post-strategy value for business. We are looking at strategy, kindly note that. So, before strategy, what was the value of your share? Post strategy, what is the value of your share? It will give you an idea of what is the economic value added for the business because of the decisions that you have taken, the strategic decisions that you have taken. The other aspect is what is called the market value added. What is market value added? It measures the stock market estimate of the net present value of a firm's past and expected capital investment projects. So, it tells you how much can you value this company. Let us say you take a software company, you want to buy off a software company. So, how will you buy off this company? So, you find out what is the type of projects which the company is in, what is the type of investments or what is the type of future projects the company is likely to get, or firm orders of the company. So, depending on all that, you make a valuation, market valuation, this company is worth this much. The human capital, then the work that the company has got in the marketplace, all this will give you an idea of what is the value of this particular company. So, there are these are broadly the financial measures, that is the ROI, the EPS, the ROE, then the economic value added, then the MVA. In addition to this, there are what is called stockholder measures. There are what is called stockholder measures. What are these stockholder measures? Who is a stockholder? How do you measure this? How do you get these stockholder measures? So, these measures concern issues relating to customers, suppliers, financial community, employees, government, local community and the environmentalists. So, all these are going to, you have to really keep all these groups in mind when you say stockholder measures. So, this is this is what you are likely to encounter. One is your customers. So, what does a customer look for? What is a possible near term measure with reference to a customer? So, a customer will be happy, suppose you record a higher sales in a particular quarter. So, you recorded X, your sales jumped, let us say, by some 5% in the first quarter, then you report that the customers are likely to feel happy. Then you are also, he is also likely to feel happy when you are able to get new customers for your company. So, you tell them that what is the types of how many new customers you received for the quarter, and what are the types of needs of these new customers that you were able to satisfy or meet. So, this is possible near term measures, that is short term measures. So, because now in the present competitive era, we are looking at situations from a shorter time frame. We are not looking at from a very long time frame. So, when we are doing that, when you look at a situation from a shorter time frame, so a customer will be happy when you say, this is the number of new customers I added, this is the type of performance which I reported with respect to sales, that is increased sales, and this is how I could meet the needs of the new customers. So, he will feel very happy about that. Then what is the type of long term of measures? So, suppose you project to him that the sales of the company has been growing over the last 2 to 3 years continuously, it has not dipped. Then similarly, the customer base, there has been a good turnover on this customer base, then the ability to control price is reflected. So, your the cost of the final product has not jacked up like anything, or it has not gone beyond the controls of the company. You have been able to have good control. It very important for a manufacturing firm, let us say an automotive firm. All of a sudden you start rising the price of your automotive cars, let us say, then it is likely to really affect your customer base. Now, for your if you want to call it the ill luck, that is the company's ill luck, the other competitors do not want to rise the price, but these are all strategic moves which companies do take in the market, in the prevailing market situations. While one company might rise, the other company might wait for some more time before it rises the price. So, the latest example is that of Maruti. Maruti saying that we are going to raise the price of our cars, all models, whether it is 800 or to the latest SX4, an upward rise of 10,000 rupees minimum predicted. But the other car manufacturers have not yet raised the price of their cars, whereas Maruti has made this announcement. What is likely to happen? So, the customer is likely to go into evaluation mode. So, Maruti 800 is going to cost me so much. So, what will a corresponding Tata car cost me? Is it better, or what will a corresponding Hyundai or whatever it is? So, the evaluation will tell him that financially he may be better off by going to this brand or other brand, or he may be advised to stay put with Maruti also. So, because it is not going to greatly affect the whole scenario. Then the next stock stakeholder measure which you should consider after the customer is your supplier, the suppliers. So, the suppliers, what do you mean by the suppliers? They are the suppliers of your raw material, that is the raw material for the company comes from them. So, what could be a near term measure? The cost of the raw material could be one of the near term measures. So, what is the at what price was he supplying to the company? Has the price been under check or has the price not increased too much? Then suppose the raw material prices were to go up, what is the impact that you expect? You expect the final product price also to go up, that will have an impact on the sales of the company. So, this is the type of impacts that is going to have. Then is the supplier supplying on time, that is a delivery on time. So, then what is the type of inventory you are forced to have? Can you just look at an inventory of 0 level? Now, most of the companies are looking at different systems of inventory. They call it by different names, just in time or Kanban or whatever the Japanese names for this, having low inventories or 0 inventories. So, you order for the particular raw material when it is required and it is ready for you. Suppose you want it tomorrow, you order today evening, tomorrow morning by the time your assembly line or the production line starts working, the material is supplied. So, this is the way many of the Japanese automotive companies are used to functioning, especially a company like Toyota. So, this is what it considers to be good for the company, that is not to hold this high inventories. So, if you hold it, you have to pay holding costs of these inventories, all these things. So, it will be good for them. Then what does that mean? It means that your raw material, the supplier should be able to have the availability of this raw material at any time. So, he just cannot say that at this point of time when you wanted this product, this raw material is not available. So, you wanted a raw material from him, you should be able to get this raw material immediately from him. In other words, this supplier's confidence, that is the confidence of the company in the suppliers, should be very high. So, an example can be given of some of the companies which are operating even in India. One of the companies is the Myco Bosch. So, most of its raw material suppliers, they supply the raw material on a phone request immediately to the company. So, the availability is of the raw material is not in doubt at any point of time for the company. So, it is made available so that the production line is not in any way hampered or its operations are not in any way brought to some halt or whatever it is, that does not happen. Similarly, what is the type of long term measures that you? So, when you look at the long term measures, it can be growth rates of the raw material costs. How has this material supplier supplied? Has he supplied at reasonably the same value, or has he supplied, has he kept on increasing the value of the raw materials? The other could be what is the delivery time schedules he is keeping up. Is he good on the delivery schedules, or is he falling back on the delivery schedules? That is going to impinge the performance of your production lines. And similarly, what is the type of inventory he expects you to keep? Does he expect you always to keep in stock the inventory of his products? So, not just ask him at the last moment to supply the raw materials. So, many times some of the suppliers tell the companies, do not ask me at the nth moment to supply this raw material, I am not going to supply, I require at least minimum 1 week lead time. You keep the stock of raw materials for 1 week minimum in your stores. So, 1 clear week I want to supply the raw material to you. All these are some of the conditions which many of the suppliers also put to the companies concerned. Now, look at the financial community. The next one which we are concerned is the financial community. Who are these financial community? These are the people who might have invested directly with you, or it can be individual investors or institutional investors, or the people who have lent loan to you. All these types of people, everyone comes under this financial community. They are concerned in the near term measures with respect to the EPS, the earnings per share. Then how is your stock performing in the marketplace, that is the stock price, that is it going up or coming down, all those types of things. So, this is very helpful to evaluate a firm. So, suppose you find that there is turbulence in the stock market, to what extent the company can absorb this turbulence in the stock market. These are some of the questions which the financial community would like to know. Now, the other one is the number of buy lists, that is how many people are interested in buying the company's shares or the products, that is the number of people who are interested in this. Then the return on equity, how much is your equity shares going to get in the marketplace. So, in the long term analysis, what is the financial community looking at? The ability to convince analysts with strategy. So, suppose you are looking for investments from these financial institutions or financial community at large, you should be able to convince them with your strategy. That is, they should get convinced with the market returns of your strategy. So, kindly note that everything that you do is linked to market, that is a company wants to do is linked to market. Suppose the moves that you take place, they do not really bring adequate returns in the market, then the company's name or the company's ability to attract or to sustain interest from the financial community, it will be dented. So, this is a type of things which can happen. So, the growth in ROE, that is the return on equity, is another aspect. How is it growing? Is it something standing still over the years, or is it growing from year to year? So, you calculate it using this Y on Y, that is year on year, and say my equity is return on equity is going up. So, this is what the financial community is concerned with. Then there are these employees, what are they concerned with? So, we are looking at, kindly note, stockholder measures. So, we looked at customers, we looked at suppliers, we looked at financial community. Now, who could be the other stockholder? The employees. Now, what is this employee concerned with? What is the type of near term measures he is concerned with? Now, what is the type of suggestions that you give for improvement of the performance? He may be giving number of suggestions for improving the performance, that is the productivity suggestions. So, how many of them is the company taking into account? So, many of these well known multinational companies, they keep on goading the employees. Okay, you have seen the production line, you have seen the measures the company is taking. Now, you suggest any improvements which you want to give or which you think are going to result in substantial gains to the company. So, gains you have to quantify. Maybe a particular process was taking 7 days, suppose by your suggestion the time of the process has comes down by to 5 days, then 2 days is the gain that the company makes by implementing the suggestion. And suppose the company were to implement this suggestion given by you, you are likely to be rewarded. And many times most of these multinational companies, they give their employees rewards upwards of, the minimum is $500, upwards of $500. So, this is a way employees also benefit, and their they also sustain interest in the company, that is what is the company's real operations. So, they always think of methods to see how the performance of the company can always be improved. The other thing which the employees are concerned is, suppose what is the type of grievances they are making, the number of grievances. Suppose there are no grievances against the management. That means to say, generally a large number of employees, that is a large percentage of employees of the company are happy with the policies of the company. So, no grievances or the number of grievances is very less. So, they are fairly happy with that. Now, what is the long term measure? The long term measure could be your turnover rate of the employees, that is what you normally say as attrition in the present software context. So, many times they say with respect to any software company, oh, the attrition rate in this particular company is very high. What does that mean? That means you find the turnover of employees, the percentage is fairly high, that is what it just means. Many people are leaving the job with respect to the company. So, this could be one of the types of these things which can come. And what is the other thing which they may be concerned is the type of internal promotions they are getting over the years. How many promotions are they able to get over the years? Then the other one, the stockholder who you should be concerned with is the government. What is the government? What is it concerned with? So, you are concerned with the new legislations which the government might enact. How does it affect? This is your first thing. Suppose some new measures, new legislations, how does it affect the performance of the company? Then the second thing which you might be concerned with is what is the access of the government, that is the key government servants, employees or whatever. So, the key government functionaries to key members and staff of the company, that is the access to key members and staff of the company. So, this is what you may be concerned with. So, is the company capable enough to get to the top echelons of the government at a short notice? Suppose something is affecting the company, how soon that the company is in a position to get it corrected or rectified, all these types of things. So, that is now the what could be the long term measures over 3 to 5 years or 1 to 3 years. You may be looking at how many legislations have been enacted by the government which has affected this industry. Then what is the ratio of cooperative versus competitive encounters, that is with the government. So, government has been very cooperative with the company. So, whenever some grievance or whenever some of these problems were brought to the notice of the government has taken action to see that these are addressed. So, these are some of the long term measures. The next one which you are concerned with respect to the stockholder is what is called the consumer advocate. Consumer advocate or CA in short. So, what do you mean by this consumer advocate? You talk directly to the customers, that is the company talks to the customers, keeps meeting the customers depending on the types of accounts. So, you categorize your accounts into A category or B category or C category. So, you decide on the number of meetings that you want to have. These are your this can be your near term measures. Suppose he is a very important client, you put him under A category, and so you may like to meet him at least once in a quarter, find out what is happening and what is the type of hostile encounters. Suppose you find that some of these are hostile encounters. So, then that means to say you are not able to address the issues which are raised by the consumer, that is this important client. So, then what is the number of times collisions are formed? So, how many times these collisions have occurred? Number of times the collisions, have occurred, that is this number of times the coalitions are formed instead of the collisions. That is, suppose you are let us say you meet these people, instead of going on a collision course, you go into a coalition course. So, collision is always hostile. So, you start sorting out the problem with them instead of, so you convert this hostile encounter, that is the collision encounters, into coalitions. So, then you are able to address his problems, the consumer's problems much better. So, this is and that the other thing could be what is the number of legal actions which are required or forced on the company. How many cases you are forced to really fight with respect to these consumers. So, this is what is the type of long term measures. So, all these might result for the company. Suppose too many legal actions the company had to take, then it might force the company to have a relook into many of the policy issues. So, this might result in number of changes in policies due to this consumer advocate. So, the many times these consumer advocates, they have how many times have they initiated calls for help. All these are long term measures from the consumer advocate side. This is the other stockholder measure. The last one, which is of interest to us in the present day circumstances of the stockholder, is what is called the environmentalists. This is, these people or this group is becoming more and more vocal, or their voice, the companies are who are concerned with environment, that is whose products are likely to affect the environment, they cannot really gloss over. So, what is the type of this thing? So, the even when you are producing some products, so these products might be starting from your what do you call the room freshener, a simple product. Is it going to affect the ozone layer? How is it going to affect the ozone layer? Sometimes many of the types of perfumes that you are going to use, how is it going to affect the environment? All these types of issues. So, this is then the next thing is you look at India only, the type of soft drink companies, how they have affected the not only the consumer's health, but also the environment. So, release of pollutants. So, this has happened in one of our neighboring states with respect to a well known company into a river. So, affecting its marine products or marine cultivation. So, all these types of things which has, so the environmentalists are really concerned about all these types of issues. Now, how do you address this? So, again you have to meet these environmentalists. So, you have to keep on meeting them, address these issues. So, how many times you are having meetings with them, number of meetings. So, similarly, how you are able to form coalitions through these meetings. So, are you able to get into this coalition mode of working instead of this confrontationist mode. So, number of times you are able to convert these hostile encounters to coalitions. Then what is the type of whether they have taken your company to some environmental boards, so for action. So, many times many of these companies, so like the company which I just quoted for you, reported to the Environmental Pollution Control Board. So, the Environmental Pollution Control Board initiated action on the company, saying this pollutants, this percentage of pollutants is harming the marine growth or the marine life in the river. So, all this, so this number of these such types of complaints which these people are registering against the company, then what is the type of legal actions? Suppose you are forced to take too many legal actions because of this, then what is going, that is a legal actions initiated by this Environmental Pollution Control Board against the company. Then what is going to happen? All this is going to again look at in the long term measures. It is likely to result in changes in policy from the company side, and it is also likely to result in probably some cost to the company in order to meet the address or in order to address the demand of these environmentalists, the company might have to deploy some of its resources to address these issues. And a number of times these environmentalists or the environmentalist groups call for help, that is, they keep on calling the company saying that such and such a thing has happened. Now, you have not addressed this issue. So, then the company is really put on the defensive or put on the back foot. These are the types of issues which you might be looking at. So, these are the stockholders which you are concerned with. So, when you say stockholders, you can put them in the category of consumers, suppliers, financial community, employees, then the government, then the consumer advocates, then the environmentalists. All these people are linked to the company in one way or the other. How they are linked to the company? How do you measure the corporate performance with respect to the stockholders? These could be the near term measures, these could be the short term or the long term measures. So, in the next class we will look at some of the financial ratios which you should, key financial ratios which you should consider with respect to a case, and how you should calculate them and what do they show with respect to the company. Okay, thank you.